Hello, everyone. How's everyone doing today? Just making sure the camera was looking okay. Recorded future traders. What is it? Boy, my brain is just fried. I have not been sleeping very well. I recorded the podcast with Jim and Bob yesterday, so I had to make sure the camera was still realigned from doing that. Good morning, John. Good morning, McRangers. Good morning, Sterling. Good morning, Patrick. So, thank you for putting in some news information there, and thank you for putting in all the earnings. We have lots of earnings. Good morning, Jacob. What else do we have? I'm looking to see who's here. Good morning, Royal Palms. Good morning, Heinrich. All right. It is difficult to know the impact of tariffs, especially since we don't know if they'll stay or if they'll go. And remember, make Gaza great again. Oh boy. Oh boy, I got nothing to say about that one. Oh, let's see. Oh boy, I just got everything's a mess right now. Sorry about that. A lot of text going off, but let's get through this live stream. The markets are pretty much range bound over the last few days. We've had down up. They're very volatile, but range bound volatile. Today, we had the mortgage information come out. We had Barkin speaking, and I know Sterling put something in about Barkin in there. Thinking it's slightly restrictive. I'll still lean towards cuts this year, and now is pricing in 2 cuts again. Good morning, Anissa. What do we have coming out that's important? 15 minutes after the cash open, we have the S&P Global Composite and Services PMIs, the small to mid-sized companies, which are still expected to be both in expansion still. We have the ISM services, so the larger companies. Keep an eye still on ISM services, prices paid, and the services PMI. Those are the two things. And I'll look at employment to see if it drops into contraction at all, but I'm going to see if the prices drop at all too from there. Then we have the EIA numbers. Then we have Goolsby speaking this afternoon and Bowman speaking, and then Jefferson speaking this evening. So today we have Google, which missed, as Sterling put in the chat, Google missing on revenue. AMD also reporting, and that tanking down. So if you have some things that are missed on revenue are still getting bought. It's wacky. Google did miss on revenue though, down 7%. Apple, we've already talked about that. I'm still watching for rollover plays and that. Amazon, Tesla, numbers out of Germany were not good for January. What else do we have going on? So, comm services just leading everything down this morning. Healthcare, utilities, real estate. So, it's sort of a risk off kind of day, to quote the mainstream media, with the rotation into those sectors. Fed watch, you have now you have a cut in June and a cut in December. Hold on one second, guys. So that's where that sits. Fear and greed, we're still in fear mode. Schiller PE back above 38. You put in Uber, Disney. I don't have time to cover all these this morning, but they're not really market moving. And after the close, we got Ford, Qualcomm. But the next big day is tomorrow after the close, Thursday after the close. Tomorrow morning, we have Peloton, ConocoPhillips, Roblox. But again, yes, they're important if you own the stocks, but they're not important from a market moving perspective. The big thing is going to be Amazon tomorrow, and we already had Google yesterday, which is definitely, since it's a Mag 7, moving the markets. So where else do we sit right now? I hope I didn't miss anybody saying good morning. S&P, that's what I'm talking about. We've had a ton of volatility, but we've gone a whole lot of nowhere. I mean, we're still trading where we were at the end of November. We're trading right before Thanksgiving. We're trading at those same levels. We've gone up, we've gone down, and recently we've gone up and down. But we are at daily cycles back to the bottom. We're at weekly cycles at the top. So can we still stay choppy until cycles get in alignment again? Yep. The key levels I'm watching overall are 59.50 and 61.35 area, 61.37. The minor levels I'm watching are 60.67 for any breakout play and a breakdown play around 60.22. Otherwise, those are support and resistance. And it's sort of triangling up. You see the 60.68 level right here. You can see, if I put this line on, you can see that was prior support, reconfirmed on Monday as resistance, reconfirmed on Tuesday as resistance. So that's going to remain resistance unless we can break and hold that level above that. If we do, then I'll be watching for that 60-30. Really, about 60-30 to about 60-37 is my target area if we break out above there into that little clear path move. The first breakdown area would be that I'm watching is about 6,013, and then we got to 59.83 as the key support level. And then the real key breakdown level is 59.51. So that's everything I'm looking at right there in a nutshell. Good morning, Ted. What's this? SMCI ramps full production of NVIDIA Blackwell rack scale solutions with NVIDIA HGX. Okay. All right. Let's see once the AI stuff starts dying down a little. In NASDAQ, which has pressure on it, I'm lowering this level just a bit today. You can see it's roughly in that same area. I'm just bringing it down a little based off the European prior, just after their open where the key support level was. So I'm looking for a breakdown. Otherwise, this, when I say a breakdown level, it doesn't mean it has to, if it just goes a tick below this, I'm looking for shorts. No. If we start breaking and then roll over at that level, that's where I'll be watching for rollovers. Otherwise, that remains support. So let's say we come down here and start testing this 21,438 level, which is an area, and then we hold it, I'll be watching for potential longs. Just like if we rally up to 21,672, that's a little potential short where we put in the double top. So again, you're not trying to make it a brick wall, but we put in that little mini double top, came down first and second targets already hit with a bounce. And actually the second target being hit was right where I moved that line to. So can we still roll over and break slightly below that? Yeah, but then my next key support beyond 21,400 is we have pretty significant support back down at 21,350. So 21,350. And then if we lose that level, that's where I start getting more and more bearish with a potential retest of the Sunday night, Monday morning lows. All right. And again, a whole lot of nowhere. A whole lot of nowhere. Here's post-election. Look at this. Here's the post-election rally. And look where we're trading. So here's the run-up. Here was a resistance shelf before. We're trading right at that same level again. So a whole lot since really the beginning of, the first week of November, we've gone a whole lot of nowhere. And you see over the last few days, completely very volatile, but range bound. I mean, since Trump got inauguration, look at this volatility we have. Remember, make Gaza great again. Oh boy. I thought we weren't supposed to get into foreign conflicts. What are we doing? I don't understand what's going on. Dow, not much to talk about unless we break above yesterday's highs. Then I'd be watching for a return closer to 87.5. There is selling pressure, though, above 45,050. Very, pretty strong support around yesterday's lows. But right below that, we have the rotation zone. If we start looking for that, I'll watch for more rollover plays in the Dow. The Russell, again, we do have a potential double bottom in there. I'd be surprised if it triggered, but we do have the technical setup. Other than that, it's on any rally. 23.18 is very, very key resistance. Hey, Rich. Haven't seen you in a while. Thanks for tuning in. Good morning, Tony. Good morning, Eric. What is it? On the Japanese 4-hour chart, is that a breakout to be considered a double top, or was it just a breakout of consolidation? JPY 4 hours. Let's just jump to that real quick. Then we'll get back to the other stuff. JP, was it a double top 4 hours? This? No, because it wasn't reversing enough of a move. This is just a breakdown from a very key support level. So yeah, I re-anchored the trend line. It was here. We had to re-anchor it to here because that's a new defining point. So that's the only thing that puts me short-term bullish again with the weakening yen. If we get above here and we're now trading, I want to really see where this starts closing. I want to really see where this starts closing because we also have the 62.5 right there. Why? Because if close below that, we could retest some levels from beginning of December. But this is just a breakdown play. It was not a double top. What else do we have here? We have the DAX. Still watching for this to get into potential double top territory and fill the gap. It came into the rotation zone. Yesterday was a %B buy with the stop. Now I'd be more aggressively raising the stop because of where the rotation zone is. But the initial stop below Monday's lows. And at this point, on a closing basis, if just from instructional point of view, I'd be using the 62.5 on a closing basis. And as this climbs, I continue to raise the stop. But then what I'm looking for on the closing basis for the upside, we're against the 62.5 right here. So we start closing above that. That's where I would start targeting the gap and the 87.5 harmonic, virtually the same levels. So that %B buy could run it up to the prior harmonic and this prior topping area, and then it would potentially set up the key reversal pattern, but that may not trigger. But it would at least be the pattern for a longer term stop that could be relied on. Notes, climbing, still off the sloppy inverse head and shoulders. So now broken through the 50 EMA. Hit this minor area, but this is going into advanced clear path. It is against the key breakdown level, so it's got to really power through this. But if it can get through this 109.20, 109.21 area, we could then see that 110 to 110.05 area pretty quickly. Yields dropping, coming into the key, prior resistance becoming support. So it's got to power through this, and then we could possibly return to this 4.35 area in the short term. What's this look like in the longer term? That could be a return to the bottom of the rotation zone again. And we still have RSI headed down. We are getting closer to cycles at a bottom, but we're not there yet on the weekly. And the daily are rolling over again. So nothing to do yet, but if we start getting down closer to this, I'm actually going to watch for about 4.38. And then see if we set up a bottoming pattern in there. Dollar index. After the run up from the quickest trade war ever, coming back down to retest the key area from last Monday's lows. Will it trigger to double? That's what I'm waiting to see. Because we're also in the area of the weekly rotation zone, with cycles getting to the bottom. So is this going to trigger the pattern or go into more consolidation? That's what I'm waiting. Other than that, that's the only setup on the plate right now. Crude, little bounce yesterday. We have the EIA numbers coming out this morning. I'm still watching unless something shocking with the EIA numbers. Now, if we come back down and put in a potential double bottom, then there could be a setup. Other than that, there's nothing long. No long setup on the horizon. I'm still watching for support between the 50% harmonic and the 62% harmonic to see if we hold in there with this prior very strong support base. Natty gas, nothing much to talk about just yet. Gold's getting a little toppy with cycles getting to the top, and this is not long-term toppy, this is short-term toppy, but we have weekly cycles at the top after a 1, 2, 3, 4, 5, 6 week run up. So does that mean short? Not from my perspective. There's no great area, and I would not be shorting into this strength. I'd be looking for pullbacks. That's what if gold, would I be chasing it up here? No. I'd be looking for pullbacks somewhere in the daily rotation zone. Because you see here, pullback at the end of January in the daily rotation zone, rotated up. This pullback from Monday into the rotation zone didn't even last a full day, going back up. And your prior major breakout level is 2850. So I'd be watching for pullbacks with all the cycles at the top, at least to those levels. The key thing with gold also is it's a little overextended. Could we even theoretically pull back to 2,800 on a multi-legged daily pullback? Yeah. And that would take it to the prior big breakout level and the rising weekly. So, what else? Will Bitcoin break out? Will the good old Bitcoin break out? Well, right now, Bitcoin, after yesterday's, I was sort of shocked at yesterday's reaction because NASDAQ was rallying and Bitcoin was breaking down. The only pattern, if you're watching something in the short term, if you're trying to play this from the bullish side only, it needs to get above 101,700 in the short term and sustain that. Because why? Then I'd be watching for this to go into triple top territory and the potential major, massive double top to be off the table. But Bitcoin's just in consolidation right now. The only thing that tips me bearish is if we close below 89K. The only thing that takes me short term, potentially bullish, is above 101,700, and that level sustains. And that's not long term bullish just yet, that's short term bullish. Because again, look where we are. Look at this, end of November. We're still trading at the end of November. You had the election run up with, crypto, strategic crypto reserve, blah, 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 blah. And now we've gone a whole lot of nowhere. Gone a little up, gone a little down, and we're trading right at those same levels. What really is the key play for me is if this rolls over. Otherwise, could it stay? Remember, Bitcoin tends to stay in consolidation for a longer period of time and then has the big moves. For example, from March of 24 through November of 24, little channeling pullback, but a whole lot of nowhere. A whole lot of nowhere with a downside basis, and then you had the big run up. Now we've got a whole lot of nowhere just in a big horizontal channel that set up a potential double top. Euro, long way off from triggering still, but that's the only thing that gets me more bullish than sterling put in where things are people are expecting possibly the euro to go. I'm not so sure about that. The only thing that would tip me is if we did trigger that double bottom, and you can see that on the weekly. Very nice, and it looks like possibly the weekly rotation zone would be out of the way. So if we did trigger that, then I'd be getting more bullish on the euro. Other than that, I'm watching for this to slam into some pretty strong resistance, potentially. But there's no good short setup just yet. Spiders, again, not much to talk about. Slight gap down this morning, so on any rally, 601.78. We have not triggered the double top, and the double top has not been invalidated. It's been confirmed, but not invalidated yet. The validation point, remember, this was not a trigger because it closed up here. It just confirmed the double top, but did not trigger it. Still, the invalidation point is a close above 604.73, then that would come off the table. The Qs, again, a whole lot of nowhere. Slight gap down, 521.46. So on any rally, 524.47. And there is still a gap left behind from Monday's close. 518.11 on a more significant rollover play. What's this one? The credit card bill being put forward by Bernie Sanders and Josh Hawley will cause a financial crisis if approved. Yeah, limiting credit card interest rates to 10% will decimate all things retail. And you know how many people will lose their credit cards? Because you're not going to, it's like for 5 years. Do you think if they say the max I can charge for interest, what's going to happen? I'm just going to cancel my credit cards to any risky borrowers and say your balance is due. You don't realize, I if you're going to do, you know what, you're trying to regulate something after the horse is already out of the barn and it could do major damage. I don't know what's going on with anything anymore in terms of the government. Don't know what's going on. What else do we have going on here? We have Google. Google, a pretty big drop, but back in the key, I actually talked about on Futures Edge yesterday, and this was before earnings came out, that there's no major topping pattern, and it's still bullish on a pullback into especially the weekly rotation zone, which is where we're pulling back now. Now, does that mean you buy the dip? No, not in my book just yet. But you start losing this 190, I'd be patient. If we hold here, I'd be watching for short-term secondary bounce plays once we get, remember, we're at weekly cycles at the top and daily cycles at the top. So I'd be watching for bounce plays coming up over the next couple weeks. But it's a little risky to just buy the dip from my perspective now. Now, Google's still one of the better charts. Comparing this to something like Tesla, which is looking like it's going to break down, and Tesla to me is barely trying to hang on to this very key support level, but I'm expecting Tesla to roll over and eventually reconnect with the 80 with the 200 simple and the 62.5 level, because that's not a strong chart. Nvidia still on any rallies. Look at the declining rotation zone now. On any rallies, I'm watching for rollover plays, and now we have a pausing bar here. Oh boy. Can't even move my stuff. So now we are sitting right at that 62.5. So if we close below 114.10, really starting in the focus on the bigger pullback to test the August low area. Yeah, price controls don't work. Broadcom, interesting enough, has regained the key support level. So if Broadcom closes above 231, then I'll watch for this to retest the high area, the most recent high area in Broadcom. What else? We have stuff like CMG, Chipotle, which was a miss on revenue. Have you noticed how we've started getting more and more misses on revenue? But watch Chipotle at 55. Close below 55, we could easily start that shifts the probabilities and easily retest the August lows from 24. Is this a big head and shoulders pattern? It's not reversing enough of the move, so I would just focus on possible retest of the 50 level if we close below 55. Trading 56 pre-market, and that's closing below 55 on a weekly basis. Okay, so there's lots of stuff behind the scenes that's not looking as healthy as it did, but the market is still holding up. Now, if it triggers some of these massive weekly double tops, then I'll really go into bearish mode in the short term, watching for the bigger pullbacks in the market, but we're not there yet. They've not triggered. Thank you, Coco. Can the market go higher? Yeah, it's still holding the weekly rotation zone. The only thing, as I said on the Futures Edge podcast, if we close below 5,800, I'm shifting to bearish mode in the short term. Until then, I'm choppy to neutral, and Jim asked me what my bullish bias was. It's 0.5 on a scale of, -3 to +3. I'm at 0.5. Okay, got all that out of the way. Let's just glance at the open. So, little run up here. Take a look. We're trading in the short term now above the key resistance level. So, based off the open, 60.42 area on any pullback. And then if that holds, I'll be looking for that 60.65 major level I talked about before. Is it possible? What's consistent income? Yes, it is, but that does not involve trading every day, and it involves waiting for your setups. Too many people overtrade when they day trade, and day trading's tough. I recommend more people focus on swing trading with micro futures, looking for the slightly bigger moves against key levels. Okay. The thing with people is day trading is they try to do something every day. There's not great setups every day. There just aren't. You wait for your setups at the key levels. Let's see where the tick opened. Decent tick opening. I mean, above 1,000. So with this tick pullback, I want to now watch for the S&P to hold support, at least the minor support level on any tick pullback. And then if we rotate back up, that's where I'd be looking for it to tackle 60.65. All right, with that, I shall talk to everyone tomorrow. Everyone have a wonderful, wonderful day. Bye for now.